How we doing today? These markets are a trip, right? Everyone's getting kind of bullish on rates coming down, and just like the markets are strong and everything's broadening out. We saw that from the lows in October to through November into December. Then mid-December is kind of choppy, and then we're looking forward to a Santa Claus rally, which somewhat happened. I was a bit disturbed by the low volume, and coming into the week, or I guess last Friday, before New Year's, that was our first down day. Is that right? Yeah. So today, Friday, January 5th, will be our 5th consecutive down day. Is the NASDAQ up now? Yeah, slightly, but it's a shit day, because at least that's how I'm reading it, that interest rates rallied kind of at open. Then we see some good data with the ISM jobs report, and the you can see like yields tanked. Switch this to 10-minute. Yeah, we see this tank here, and it just rallies back up like nothing. The CME group is all over the map. I think coming into today, I don't know, we've been, as of a week or two ago, as high as I think 80 or 85% for a rate cut in March. Then gradually coming down as interest rates go up, as the DXY goes up. And coming into this morning was maybe 63%. The initial report that came out around, what does that come out around 9? We see the CME group drop March to almost 50-50. It was like 56% that we'd see a rate cut. Then I guess another report comes in at 10. I'm forgetting the data that came out on that report, but that was viewed as positive. I think you can see from here, 10 o'clock, massive drop in rates. I'm sure the DXY, massive drop in the DXY, and markets rally behind that. The CME group changes their forecast on March, spikes all the way to like from 56 to 74% or something like that. And then it just kind of worked its way back to, we didn't get back to where we started this morning, but normality, I guess, or to some mean. So yeah, I don't like the sell-off. I don't like the week. Like if yesterday was kind of the bottom, waiting for some somewhat positive news, I'm not even sure. I thought today's data was mixed. We rally off of this at least a little bit, right? And no, we couldn't really hold anything. Luckily I caught like this option on Nvidia as it rode from, I don't know, 488 to 495. Luckily got out of that near 493, even though I'm down on that. But I don't know, I rode some of the momentum on a trade today, and then it's just a weak close. Can't really catch anything. Anyways, what I'm going to look at today's, I already touched a lot of it on what I feel macro, what I'm expecting for the rest of January. As I've mentioned in previous videos, I'm anticipating some kind of correction, retrace, February, March, and but is that happening now? And like the Trader's Almanac will say we're now 5 trading days coming over from last Friday. Red. I don't know. guess we're at after hours now, and it's kind of whatever. Maybe this won't count as a red day, but it feels like it should. Anyways, even 4 red days to start the calendar year is not a good premonition for the rest of the year. So the decision to be made, even though we feel that correction or retracement is about to occur in quarter 1, is that happening now? So first I'm actually going to do a dive on Apple. Yeah, I mean, it's getting a lot of headlines that it's performing weak. Wow, it's actually rallied pretty hard into close. 181.17. It was trading at like 180.5 or 180.25 through much of the day. Wow. Okay. Trading at like 181.17 now. Kind of doing its own thing. None of the other like MAG7 have done anything. Interesting. That surprises me. But yeah, let's take a look at Apple, compare it to the MAG7 over the last, I don't know, around the beginning of the pandemic. And then I'll wrap up with like macro thoughts and some fundamental thoughts on Apple, why I'm ultimately bearish. Yeah. So let's take a look at Apple here. On the 10-minute, let's switch it to like a 2-day. Okay, so I remember it performing fairly strong. It was Amazon and Tesla in the toward the end of the bull run during the pandemic that kind of held up, and they were kind of like the headliners, like, wow, maybe things aren't as weak. I remember Apple and Tesla. Bring up Tesla here quickly. Holding up, while even the rest of the Magnificent Seven were beginning to decline. So here's let's see, through October 20. Yeah. Apple here, Tesla, way outperforming it. But take my word for it, those two were outperforming and were like the last ones to drop. Yeah, so I guess here's 2021. I don't have a percentage on it. I don't know. I know Tesla hit like 400. Let's see what Apple hit if I take this off. Apple hit like 180. Then around here. So let's just look at the price action over recently. So right around here, you see that first poor earnings report where they actually missed. I did look over the last. So that's kind of the concern about Apple is, I'll jump into the fundamentals. Where's the growth? It's a great innovation company. It had amazing, what's the word I'm looking for? Earnings margins. So the margins on their products. So the amount that they make selling each of their products is extraordinary. And that's been the story for the last 15-20 years. And they've had some moments where what's the next biggest thing, and they come out with something, and the story continues. The bullish sentiment on the street continues, that they can continue to innovate, they can continue to come out with great products. They have the best product available, or they steal from other companies' innovations and perfect it. But now that's kind of flipped, that they're just like, what's the next? Well, like I just said, we've heard this before. What's the next great product to come out by Apple? And it's been a little while. I wouldn't say the Apple Watch is a bust, but it's not a game changer. And then Oculus and all that that's way down the road. I don't think any of these companies were anticipating, maybe Meta, for that to be a real revenue stream. But has it been too long since Apple's come out with a great new product to really rejuvenate the company as far as a great technology, great innovator? Maybe it has been a while. I'm thinking, you tell me if I'm missing something. The iPad. And I don't even know how much of the pie does the iPad bring in. I'm sure everything is relatively small compared to the iPhone. Though I did recently hear that there's like PayPal and Block are not performing as well, and some of that might be due to Apple Pay. I'm sure all of you guys are beginning to see Apple Pay pop up as a payment option on your phone or wherever you're trying to just make a quick payment. So that's. I think the Apple credit card has been a buzz. You tell me if I'm wrong, but I don't hear anything about that anymore. So yeah, given that, and also given the fact that I hear in Europe that inflation is kind of spiking up again. Are they maybe going to get into some type of recession? I still believe that we're going to hit some mild recession. China looks really weak, and that's obviously a big consumer. So besides everything that I just mentioned about Apple, is there still headwinds over the next year or so that economies, the consumer, looks weak, and that's another factor why Apple is going to struggle for the near future. So taking a look at this chart, I remember so at the end of last year, it seemed like a lot of tech companies hit a low here. We rally. They get their first bad quarter in like 4 years or something, where they miss estimates. Stock declines a little bit from 154 to 144, but I guess the markets or the MAG7 just carry this company up despite. They beat the next 3 quarters, but the revenue is declining, and much of these companies are seeing their revenue grow. Like, you can look at a Microsoft, or you can look at a Google, I believe Amazon as well. Definitely the cloud stuff that I'm in are booming as far as revenue. Semiconductors booming as far as revenue. So that looks poor. You take a look at EPS after this poor quarter: 1.52, 1.26, and 1.46. So no growth there. From before that quarter, just about the same. Seeing between 1.5. I guess 2 years ago they had a 2.1. Not sure when they've done their last buyback. I know that's a big thing with Apple, that could happen yearly. Just taking away shares off, floating shares off that retail or institutions can buy to create demand. But yeah, trying to interpret this chart. Obviously, this looks pretty poor. I mean, let's bring up these other guys. Meta outperforming a recent. Switch this to look at today. Yeah. Like over the last 6 months, you can see Apple's up under 5%, Google's up 17.5%, Microsoft's up 18.6%, Amazon's up 29.5%, Netflix is up 37.5%, Tesla's up 38%, and Meta's up 49%. Bring it back to like a year. That's about a year. Meta dominating 86.4%, Microsoft 39%, Netflix 29%. Amazon 28.6, Google 26.2, Tesla 26, Apple 25. So it's underperforming in that sense as well. But yeah, I mean, obviously you can see this possible double top here.
Movavi.
I feel like, I mean, it definitely sold off more than the MAG7 during
Movavi.
that September-October sell-off.
Movavi. Movavi. Movavi.
Tesla sold off really poorly.
Movavi.
Here. The Apple's on the bottom.
Movavi.
It's kind of like the bottom of October. You see it relative
Movavi.
where Meta actually held up a little better. We got Tesla here.
Movavi.
Netflix, Amazon. Yeah. So I remember just in the
Movavi.
end of October where remember it fell below 180. Went down, I guess we're seeing like 164. How far is it going to go?
Movavi.
And yeah, sentiment got pretty bearish. And pulled up
Movavi.
with the rest of the market and actually did quite well. I want to say maybe outperformed the Magnificent 7 because of how much it was oversold, or was it oversold?
Movavi.
And tested 200 again, but
Movavi.
rapid sell-off here, and
Movavi.
I mean, I'm on the 2-day now. We're falling behind. We're falling below the 100-day moving
Movavi.
average. Switches to the weekly.
Movavi.
Here they go. Okay, so it just fell below
Movavi.
20. It's about halfway to the 50 on the
Movavi.
weekly. Go to the daily. Yeah. I
Movavi.
mean, it could definitely find support here because it's, let's see, the 200-day moving average
Movavi.
is about 178.48.
Movavi.
Yeah. Typically the way I've been playing the Magnificent
Movavi.
7 over the last 2 to 3 years is just long-term investments. If just,
Movavi.
I feel like a more aggressive, stronger way than playing
Movavi.
ETFs or putting your money into 401k. I feel like all of these are going to outperform.
Movavi.
I was a bit bearish on Amazon for a while, a bit bearish on Google, but I
Movavi.
mean, looks like they're moving into AI. Looks like their earnings look really strong. They're taking the right
Movavi.
steps to continue high growth. But I mean, Apple, I
Movavi.
did say they're getting into making chips. So I'm trying to think, how is Apple transforming as a
Movavi.
company to
Movavi. Movavi.
to get back to growth and to keep up with its peers in the Magnificent
Movavi.
Seven. And the only thing I can think of now is like
Movavi.
creating their own chips. I mean, They've talked about getting into cars, which is probably a good idea. They never did, because even if they created some kind of EV car, like we know that industry is really struggling. Some TV line, I remember that being a thing for 10 years. That never happened. So that's the question. How are they going to keep up with their competitors? How can they create margin? It comes from innovation, creating the next cool, awesome product, and bringing that buzz back to Apple. I wouldn't touch this company for like a year or two, or a year and a half maybe. And I think obviously if it gets oversold and then you see us get on the opposite side of a recession or the end of a recession, that could be a great buying opportunity where the consumer looks strong again. The PE ratio is like very appetizing. I think the Ford PE I heard is like still 28 or 30. So obviously that would be a great trading opportunity, but as of now, until something comes out with fundamentals to spike my interest again, I think they're in a tough spot. They're in a tough spot that, I mean, given the price action over the last year and a half or 2 years, it seems like they're depending on the momentum of the Magnificent Seven to carry them. And just their name, that a lot of people aren't getting out of it. Now, if mutual fund managers, if Wall Street, if everyone starts turning on them, or some people even start turning on them, and money comes out of ETFs that are involved with them, that Apple's within, then yeah, I mean that can do long-term damage to the stock going forward. So I don't think that's really changed as of now, but I think Wall Street and institutions are beginning to wake up to that. I mean, this is the second warning, I guess you could say, for Apple, where they had that bad quarter, I guess 9 months ago, or is it a year ago? And now there's poor headlines again. Not bad, poor. So there's only so much damage I think a company can take until it rebounds, at least in the short term. Now at 180, I guess I'll get into macro now. I want to say I'm still 55 or 60% that these markets will turn. We've just saw some headwinds with the inflation rate. What really spurred all this sell-off is just mutual fund managers, institutions, whale money just taking profits, and being able to defer those tax payments till April of 2025. I was hoping that would only last 2 days. It seems like it's kind of happening 4 or 5 days. When are people going to re-enter the market? There's also a report today that, I don't know, there's mixed reports. I'm hearing from banks that money markets are higher than they were the previous month, but then Bank of America has a report today that their inflow into equities is the highest it's been in like a year or something, or definitely higher than the previous month. So contradiction there, but I'm still ultimately somewhat bullish. January is usually great. Coming into this year, the belief of a presidential election with the president getting re-elected. I'm forgetting the word that starts with an I. We've got that going for us. The second year of a big year still tends to be pretty big. So coming out of obviously we know 2022 was really poor. 2023 was extraordinary. Usually that second year after a really bad year is still very positive, anywhere from 15 to 20%.
Mo Valley.
And then, yeah, we may see equities come down as the beginning of rates, as they cut rates, but that's usually a great sign after a few months that there can be a broad, and as we saw in November, December, a broadening of the market where smaller cap companies, mid cap companies can thrive in lower interest rates. Obviously, tech companies can thrive with lower interest rates. So anticipating that in the second half. So first half could be choppy. Still hoping January can turn around. My outlook is still by August or September, will probably be a little lower than here after some major sell-off. But we could have a great second half where earnings look strong, the economy is getting out of a mild recession, or we didn't have a mild recession. Inflation looks really good, maybe 2.5% or lower at that point, like CPI numbers. And then you start seeing like a true re-acceleration from growth companies, like especially tech and just even big tech, where they're starting to anticipate the implementation of AI, where they can have less workers and higher output. So already by the second half of 2024, you're already starting to look at 2025, maybe even 2026, at some amazing EPS numbers, and the market's going to get ahead of that. So I'm looking for 2025 to be ridiculous across the board. Cryptos, equities, big tech, small, like 2025 should be explosive. So I'll end on that. And short term, quite bearish on Apple, unless it can pop again, that we get some pop in January. I doubt it'll get past 190, maybe 200. But yeah, hoping the markets can get a bid here, rally toward the end of just January. It doesn't have to rally through January, but just get a pop, retest 4750, 4800 on the S&P, then get a truer sign. I think we see bank earnings next week, which can be very telling of which direction the economy is going. Just to buy us some more time, that have we really reached the top on these indices, or as many people were projecting in November or into December, that now we're going to break through. Now we're going to break through. We've made it all the way here. We've made it back to all-time highs. January and February are strong months. We're going to go to 4950, 5100. So I just want to see if it's possible to retest that. I'm doubting that at this point, because I think we needed to have a strong beginning to January. Like, I understand the sell-off from Tuesday and Wednesday, but if we were going to have a test of 4950 to 5100 or 5200, money would have came in hard by Thursday, I believe. So I'm kind of eliminating the possibility of a move to 4950 or 5100, but I'd like to see us at least retest all-time highs or have a false breakout. Buy me some time, buy us some time to navigate this, to trim. I think Magnificent 7 needs to be trimmed. That's the talk on all the street. It's all I hear about CNBC. I mean, they're doing it. It's massive money coming out. It's massive money coming out. I'm not saying that these guys are smart or good at what they do, but that's massive money coming out of Magnificent 7. That's undeniable. So I'm likely going to do the same. Stay on the sidelines till August or September, looking to get back in at, they might even be at the same price, but I doubt it. I think they'll be a little lower. I think we see broadening. Small and mid caps, utilities look good, healthcare looks great. Hoping biotech, I'm not sure on that. That's probably about it that I feel very strongly about. But yeah, that's a game plan. Good luck to you.